Hello, everyone. Welcome to today's session. I hope you had a great week and Thanksgiving and off. Here we go into a new month. So, exciting market conditions. We'll start out with this top-down approach. We're looking at market conditions in bullish in this bull market. Bull market rank sitting at 25.61 and towards the upper end of this range. We're starting to see that momentum starting to just flatten out and starting to curl back down just a little bit here, and that has been the case now for quite some time. We're also seeing buy-sell ratio sitting at the upper end of this range. Well, I should say not the upper end of the range, but it's up 2.5. So we're sitting with bulls still in control right here as far as this overall database is looking for the number of stocks in that uptrend. If we take a look at the market indices, let's jump over and look at the S&P 500, and also pretty quiet the last couple of days. It's been working towards this overall uptrend and breakout, but pretty quiet price pattern right here as well, and relatively light volume. Also, typically not a lot of news items that are happening. It's a relatively quiet time over the next few weeks. Last week, obviously, with Thanksgiving, light as well. The S&P 500, again, this bullish zone, we're just stuck right in this bullish trend. We have not have yet to reach any kind of extreme here, but we've bounced off of this support level and now pulling that 236 level towards the upper end of that range, and that's S&P 500. If we take a look at the Dow and the Nasdaq, we're still continuing to see these small cap and names, small cap, Russell 2000, 3000, 1000 continue to rise, and Nasdaq also nice support area here on Nasdaq, and the diamonds, DIA, pulling back to some support. So a little bit of a pause here, relatively light volume. May continue to see that going forward unless we get some real big news items and some catalysts that could drive the market higher as well. We're seeing sectors continue to be strong across the board. A couple of moves, a couple of those sectors have dipped back down into that short-term trend with a short-term trend down. The remaining are all up with these signals in this hold range buy zone. Also, base material, energy, and healthcare, kind of the slow goers of the group right here. Commodities, if we take a look at gold, silver, and oil, we are seeing that also in this range where we're getting some support in gold. Right, I wouldn't call it a lot of support, but we're inside of this range now, this 382 level, 236 area of support, and holding steady. SLV, a little bit of a pop here, 1.8%, some support happening inside of this range, this 618 retracement zone, often finding some support and creating some new demand inside of those areas as well. Needs a little bit of work with that deep of a retracement. We're seeing that with USO. USO still in this downtrend, where the time frame that we're looking at here, this 6-month time frame, we're connecting this low and here, and we're now working. This is the counter trend zone. Okay, so this is the trend direction. So we're still seeing, oil just cannot pick a trend right here currently, and that's okay. It's oil. Not a huge deal one way or the other. Sometimes if it's a strong rally, we can find some of these oil stocks that are gravitating towards the top. I will say everyone in the house is fighting a little bit of a cold, and I can already feel my voice going just a little bit here. So we may get a little bit shorter session here today. Nonetheless, we did skip on Thursday because of the holiday, so I wanted to make sure that we were caught up right here and talk about some of these things. Now, if we jump over, again, market conditions, when we're looking at where are we at in this market trend, that top-down approach is when we're dealing with the length or the top end of this momentum, the top end of the rally, Does that necessarily mean we want to go short aggressively? Do we want to go bearish aggressively? Do we want to sit out entirely? Do we want to go more stronger to the bullish side? And really, this is just a way to be able to manage the risk associated with where we are at in this current trend. Upper end of the range, we know that these trends just don't sustain, particularly after this long of a move. This was the COVID sell-off, this big long run-up, and then retracement. We've had this big long run-up now happening over this length of time also, and that is really what we're looking for right now is what kind of allocation, what kind of percentages do we want to have invested in equities. Everyone's different. You've got to be able to decide that for yourself inside of your trading plan to say, I want X amount of allocated towards equities. In this case, we're hovering right around that 25%, a little bit more than that now, and we're getting a few of these trades that are starting to dip back down, getting some retracement, and a couple that have really done pretty well here in a short amount of time. BFLY, which is an entry back here, continuing to move to that overall upside, and that's the allocation that I'm comfortable with where we are at in this trend right now. And that's just right around that 25%. So there'll be times where we get up in this range and maybe we're taking some of the gains off the table from either the winners or the losers. To sell off some of the winners, we're basically saying when we reach a certain area into this uptrend, we're going to sell a certain percentage. So the current, there's multiple ways to do that. The trading plan that we're utilizing says if we get an increase of 20%, the first 20% from the initial buy point, then we're going to sell 25% of the position. So if we own 100 shares, we're going to sell 25 shares into the strength. So as it's moving higher, we want to do two things. We want to sell into some of the strength and lock in the gains because you never know how high it's going to go, if at all, if it's going to move really high, if it's going to move up 20% and then reverse and head lower, or market conditions start to pause and start to weaken as well. That can also happen. So we want to be prudent and take some of the gains as we get them, and not necessarily just swinging for the fences on every single trade, because it takes time to, these are daily bars. It takes time for a stock to move higher. Market conditions have to be right, and when that happens, we get some of these nice moves. When it doesn't happen, we get a move up and then a move back down, or it does never break out of this pattern and ultimately rolls back over, or this may be it, may be the end of the trend, and we have at least been able to capture some of the gains along the way. And then with the remaining shares, we do that twice at 20% and at 50% increase, selling 25%. Okay, and then the rest we're using a trailing stop on, so continuing to move higher. Now, and again, we can do anything we want at any time. We just want to make sure that we're inside of a structured plan so that we're not just gunslinging and buying something because it just shows up, shows up on our chart, and so we buy it. And that's also fine too if that's the method that you're using, as long as you've got your risk established for those setups. So BFOY. So that's really the biggest factor in terms of where the market is in the length of the trend. Is it well into the trend? If so, then how aggressive do I want to be? You can certainly still add those positions and be that 5% allocation would be pretty high. We're typically doing the 2 to 2.5%, and a lot of times even lower than that for the risk. So those are the factors when you're looking at what is the market doing, what is my allocation, and then what is my management strategy? What is my entry process to be able to enter into? So when we're looking at trades, setups, this new buy list often is the starting point, or a starting point that we can focus on and look for stocks that are moving back into the momentum zone and that are moving back into this bullish trending location as well. From there, we can decide, is this one that I want to add into my portfolio, or do I move on to something different? Again, you can also have different criteria for entering into different stocks and different trades, and be able to say, I want momentum, but I also want something that is positive everything, positive ROE, positive annual EPS, all those different factors. So creating screens to be able to set those scenarios up as well is helpful. And then determining the risk. Now, determining the risk associated with the trade, we can use that one, but let's go through and see. Let's use this one. We can use this one here. I'm going to refresh this page. Okay. So here, in terms of money management and the trade execution, we can say how many shares do I need. So we know that we're talking about our position size, number one. So if I just type this in and said 100 shares, that's 0.65 of 1%. It's really low. It's not hardly any of a position size. So I can go higher than that. If I go up to 500 shares, that's 3%. That's too big. Okay, so I've got, let's come down to 250, 280. 280, that's 1.8%. Let's see what that 300 number is. All right, around 2%. Okay, now from here I can establish my stop loss. That's my position size, my stop loss. If I said let's go down to 675, puts me at 0.26 at risk, or $300 at risk. And that's typically that acceptable range that we're focused on, is the 0.3 to 0.2 portfolio at risk for a trade. Now we know what our structure of the risk is. That means how much is at risk on this trade based on the trade itself and based on the portfolio, and then setting up and then just setting that trade up so that we're good to go and we're now in that overall trade. In fact, let's jump over. There's a couple ways that we can do that. We can look at Webull. We've got some exciting changes coming over the next couple weeks with TradingView. I'll touch on that as well and be able to access some of that information. In fact, TradingView, we've got a couple of the indicators built out. This is how it's going to look. You can actually access the momentum zones and the Fibonacci tool on the platform currently. I'm going to be doing a bunch of different updates on this setup as we're doing some transitioning over to the TradingView platform as well. Okay, we're going to have, over the next 30 days, we're going to be working on a transition. So there'll be a time where we can still continue to use both of these, but ultimately by the January 1, we will have moved over to TradingView primarily, but we'll continue to update that and focus on that as we get a little bit closer and a few more things built out on that. So the money management portfolio, the number of shares, the risk, the stop loss location, the market conditions, and then the management strategy from there. When it's moves lower, we get stopped out. It moves higher, we sell into the strength, we trail a stop on the rest. And those are essentially really the core fundamentals, the basics of what we're focused on, and then from there we can branch out into other additional strategies as far as do I want to trade more positions than I'm trading? Am I adding one in each day? Am I adding one in each less than that, because my screen criteria are a lot more. There's a lot more stringent criteria that I've added into that, some additional fundamentals, and so maybe my screen criteria are a lot smaller in number than I would be if I'm looking for just a new buy list on that group. Okay. Now going back, I'm going to be doing a few updates here on this TradingView implementation. I didn't want to get into it a lot here today, but there's still a few things we're building out, and you can actually go out and tinker around with that a little bit. I can't get my screen size here. If I can do something like that. Some exciting things. We've got the bar color, the momentum zones, the Fibonacci snap tool is there, and then also some really exciting scan settings that we can be able to utilize. The new buy list, the muscle stocks list as well. These are all going to show up down here on these lists. So in that transition. So adding these indicators, if you even want to go and check those out now, you can type in here and you can just type in those names that you see here, Fibonacci snap tool, momentum zones. They should be there. They were just added within the last few days So they may not be showing, but you should be able to get access to those on the TradingView platform. Again, I'm going to be doing multiple training sessions on this implementation over the next few weeks and months. Our goal is for to have both working during the month of December and then ultimately working towards implementing January 1st fully over onto TradingView. Just a few things to consider today as far as just a recap on money management, trend management, what we're looking for on the trends, a short introduction to the TradingView platform, and that'll do it for today's update. Everyone have a fantastic day today.